have to go contractual. Selling those, but not my soul. I sell the clothes to buy some more. I'm with my bros, divide the dough. My high and low, my favorite hoe.
All right, ladies and gentlemen, got your watch list coming into August 19, 2019, and the stock market isn't getting any less volatile. Here's the 10-day chart. You guys have seen what happened following the Fed rate cut. We had a drop and a pop and a drop and a pop, and now we're still stuck in this middle range. But now, we are waiting to see what China does overnight. But even more important, we got more uncertainty out of the political administration. We're seeing that no deal, that there might not be a deal with China that was said. We're awaiting Huawei actions. It's now going back to this uncertainty. And really what I'm saying that the stock market volatility isn't going anywhere, because if this all persists and what we're seeing, you guys could see this move here. Let me remove the VWAP. But if we get this pop and drop again, we're going to cover that. It could pretty much turn into an October. So we're going to keep our eye out for this. It is creating opportunities for more downside, but even better, more upside too. And which is going to be the best? The option pricing is going to tell us. So I'm going to go over the watch list. I got your plays for tomorrow. I got your keys for tomorrow. And that's pretty much it. We just got to get ready. And hopefully we see you guys. We are live Monday through Friday, 30 minutes before open. It is pinned in the comments. It's the first link in the description. We'll see you there in the pre-market. Make sure you guys drop your thumbs up on this video. But now, more importantly, you need to post your watch list below. Post whatever plays you're looking at. We got to source that information, so do that. And now let us get into it. So we'll start with the keys for tomorrow. I've already kind of explained some of it. I'm gonna try to make this quick because you guys need to control your expectations coming into this week. A lot is gonna be pretty much stemming off of everything we've had the last 2 weeks, and sometimes no news has been taken as good news, but even more so, it's knowing how to respond to the right policy or actions. And as the same news keeps coming out, and that's why this uncertainty with the trade war is so important, it's going to change a lot of things. So the first thing is the trade war is back, and this is what we were seeing. We've been seeing the escalation go back and forth, but the president said he's not ready to make a deal, and he won't say if he's talked to China or not, but he is saying he's going to make a decision on Monday. Huawei's coming back into the picture, and I still want to see what happens with Apple, but that is going to be the first thing to watch out for, and it's going to be waiting till we get the updates or seeing the scale if there is any retaliation from China and watching how the markets respond. You don't want to get too jumpy. So the best way and the best strategy I'm going to be employing, we had a lot of the contracts that expired this week. We're not holding too many weeklies because right now, as this is a weird time, I'm pushing everything all the way to September 30th as far as the plays go. So it's kind of crazy how fast this month has already went by. And at the end of the day too, the second half of August is where stuff really starts to pick up. And again, you can see by the volume, summer's pretty much over and people are returning back to the market. So we're going to see hopefully volume increase and how that's going to affect the market. But like I said earlier, the thing I'm looking for is if it's going to be a cuck week or a repeat of last week. Either way, if the big swings persist, this is going to be playing out the down Friday, down Monday we got in the last 2 weeks. So the key for this next week, the main thing I want to be looking at is pretty much the size of the candles on the day. What sort of ranges do we stay in? Because that is going to determine a lot if we're still having this push and pull, this cat dog, this volatility, because that's going to mean pretty much the market is hypersensitive to reacting to stuff. And again, the more uncertainty, the worse. And the next thing I'm looking out for, it's related to bonds, but liquidity. So if this still persists and uncertainty increases, I'm going to be prepared to watch liquidity go away. And a big sign of that usually is volatility. The bigger candles, less liquidity usually. So that's the main thing I'm going to be looking for tomorrow, because again, remember the signal of a down Friday, down Monday is saying either a new high or it's setting a new top, or it's signaling a bottom here. Again, that's why I'm saying we have an opportunity to profit on both ways. We still have a few earnings, and it's kind of even leading to the main thing and some of the main companies I want to watch, which are going to be the value stock. So this week is just, it's going to be about listening, and hopefully you do not listen too fast, and again, being smart. And let's try to find the plays. If you guys saw that video I made over the weekend talking about the news, it's finding the news events, but finding the plays now that where the pricing makes sense. And the pricing is going to be key on everything this week. There's going to be some snipers and wait in the bushes and wait. You guys had some good frog hunting last week, so let's take advantage of it. So I hope you guys are ready for that, and let's get into the plays. We're going to bust through this right off the bat. So I got Bank of America. This is one of the only weeklies I'm holding. I got them last week. I played both sides, and we did see the bank show a different side of weakness. So as you see here, when I pull up the 10-day, and this is really how I'm viewing a lot of things. I mean, we could even put it to the 14-day to get a bigger picture of it. But here's S&P. Notice where the S&P is at. It's pretty much in between the levels from the Friday gap down. You're seeing who's really taking a beating from there. So the banks are at that point. And again, one is either lagging or leading. Either the banks are leading the market or they're lagging from the market. That's why we straddled it both ways. And again, this whole move has caused Bank of America puts and calls to just be considerably cheaper. The only way we lose on that is if it keeps doing this kind of slower move down and you get caught paying higher premiums and then it doesn't have a move. But watch Bank of America. We already have that play. I believe we're holding on to the 29 call, which we're down $12 on, and we're up on the 27 put. So again, and that one's pretty much literally right at the money. It was already in the money. So we're going to watch how those play out. You could watch some of the other banks. Deutsche Bank was moving a little bit weird last week too. So keep your eye out for that. Next is Palo Alto Networks. We bought that 195 put. Yet we caught the news. And if you guys didn't see this, I still need to make a video to show you guys how to take advantage of the option chain during these events. But the news came out, the CEO is leaving, and some people are like, well, I thought that news is old, but I'm pretty sure this was the new CEO leaving. So again, the CEO left, and they got a new CEO, and then that new CEO left again. But now a lot of insiders have been selling shares. Pretty much, this is not good for Palo Alto. And again, I like them. They're an expensive company. They're related to tech. You got a bad news event. They dropped a lot, but we pretty much hustled the market maker. I got a 195 for this. It's going to be this week now, but we got it for 50 cents. It's worth $300 now, so I'm going to watch how that plays. I'm pretty much going to be holding on to that, and again, trying to maneuver the premium. Either if it gets in the money, buy a call to hedge it, or sell premium, or even just take the profit and move on, because we had a few plays like that last week where we were up on. A good example is Amgen. They went up, again, similar $50 to like $200-$300, and didn't take the profit. So I want to focus as we get more into some of these more confusing markets. It sucks because we've already went 1 or 2 weeks playing the up and down, up and down, up and down, and we should have probably took the profits last week. So this could either be the week that cracks it, but then if there's another cuck, it's going to slow you down. So you want to make sure you're emphasizing and taking your profits. That's one thing I even said with the Robinhood account. We took this thing all over the place, up and down and up and down. But like I always said, it's just setting a balance and a cash balance to making sure you'll end up where you're still booking profits and going to end up at a higher price. So watch out for that, though. Watch Palo Alto, because if that situation develops, that could be very, very good, even on the downside and even on the upside too. But I like Palo Alto. The next one I also like is Starbucks, and now this is going to lead into other ones. I made a play on them last week. They were down. I'm looking for both next week and mainly the Septembers, though. But the key with Starbucks, watch any value stocks. So again, this is the same thing I was saying yesterday. Even McDonald's, I like where McDonald's is at. Unfortunately, that contract we had expire. I'm going to look to try to get another one. It was up a little bit, but we didn't take advantage of it. But again, watch for a risk on or a risk off event with the value stocks and see how the market responds. Honestly, these type of value stocks, McDonald's, and again, another one up here, Walmart, they had earnings too, and I think that could kind of carry over. But these type of stocks that people rotate to during times of weakness or even fear and volatility, they kind of interact with the bonds to a degree, and that's what I'm kind of waiting for, is to see where are people positioning and how do they position after all these events and everything we've saw so far. So keep your eye out for that. And then lastly, FedEx. I built a pretty decent sized position on this so far. Well, pretty much a couple $100 for me, but I like them. I'm getting both this week, next week, and September's. Really, I want to start focusing on September's this week, but I like where it's at. I did make a trade right before Friday at close. I was holding the 167s for this week. They were down, but then I bought 2 of these 170s for like 8 cents each, and I don't think it's going to go to 170, but the reason I bought it is that if there is time on it, and let's say Monday or tomorrow, there's a big move up on FedEx, those could go up, and my plan would be to sell the premium to pretty much facilitate this one closer to the money and allow me to hold that at a lower cost basis. But watch FedEx. I like that as my bounce play in anything as a rotation, and these are going to be the main stocks I will be watching. As far as growth and now some of the riskier ones we could watch, Crowd. I brought this up last week. Again, we've been seeing how it's moving, but it's been holding up very, very nice. Again, if you put it on that same 10, 14-day test I've been talking about, there's that Friday move. It hasn't done anything, so it's pretty much staying the same. I like how it's holding up. I like how the market and investors are responding to it, so keep your eye out for that. I'm going to be looking at call side on it, but the problem with Crowd, the option chain is expensive. I'm not too big of a fan. I want the Septembers. Again, it's not too liquid. That's why you don't see shorter weekly term contracts on there. but some of these are expensive. I will maybe consider a spread on it, but again, they're holding up a price because they have both time. The volatility is holding up because it's up there, so we have to just see how that plays out. But again, if it does break around 100, it could go pretty crazy like the last time after it did break, I think above 80 or 90 or something like that. So keep your eye out for that one. I like that one a lot. Again, the pricing just has to tell it. GM now, I want to watch this again as the trade war gets a little back and forth. And again, all this stuff happening in Europe, I wouldn't be surprised to see some of the automaker stuff come into play. But I got exercised on that contract. Remember, I bought that call on there. Well, I had that $38 put, and again, this account only had like 2 or 3 grand, and they still exercised me because I was $1 in the money. So that is something for you guys to know. If a put expires in the money, even if you have a small account, you have equity in the stock because my put was the right to sell it at 38. The stock's trading at 36.90. They'll loan me the money, so I'm still up $69. But remember, that contract I was up 150. So after I paid for the contract, that expired. They gave me the shares, and again, it was a 38 contract, and I spent like $31 or $39 after commission and exercise fee. That's leaving my cost basis of pretty much shorting it at 37.60, and it's at 36.90. So I'm probably going to look to exit that in the morning. However, I'm going to be forced to play it now, but I'm going to keep my eyes out for General Motors and, again, any of these autos. But, again, looking at the same 10-day test, it's also trading lower than the market. So same logic between the autos and General Motors as well as finance and banks. Now, the last two, these aren't going to be my favorite ones just yet, but I do want to watch them. TLT and GLD. But starting with TLT, again, it hit that crazy high. And again, this was on Thursday. This was the lowest the 30 years ever been. It hit that, then it came back down as we were just at some of these weirder crucial levels there. We were at a low, and then the market bounced up. But this is going to be key to watch. It's going to see, do we finally get a 2 or 3 stall out or downturn on the bond rates, which we really haven't seen. We've only seen a few days like this, and then it led to gap up. Let's draw the chart out a little bit more. But pretty much anytime it's really stalled, it's hit a top, came down, but then it's gapped up. And this is what we need to be keeping our eyes out for and seeing how this is going to affect premium in general. How does the market do they keep pretty much flowing into bonds? And that's going to be the key. But now I've said this, it's going to go bonds and then gold and silver. So that's why the next thing I'm going to be looking out for is GLD. So this is the key here. It hasn't moved really too much since Wednesday. That is going to change the implied volatility. And the best part is, if there is any TLT and what bonds are doing is showing how the market's going to react. And if they keep flowing into bonds, eventually gold and silver and stuff is going to have to move. So I want to check the prices on there, but I'm very, very interested in gold this week. Honestly, if there is a rip and this brings down gold, the longer term contracts could get really, really, really good on that. So maybe it could create another TLT opportunity. If it does, stay tuned on the watch list and on stream, and I'll let you guys know. But I really, really like that. I'm going to be watching GLD as well as SLV. And now my 3 favorite plays, I'd say on this point, besides the value stocks we're going to be watching, Beyond, Boeing, and Facebook. Now, Beyond, I thought it was going to come down. It came down. We were briefly in the money. And again, those are one of those plays we didn't really take profits on when we were up on them, because it's really easy to get greedy on this stock when you could see what it could do. It has been having a slow move down. So really, pay attention for either tomorrow or even Wednesday on this stock. We want to let premium evaporate. I'm looking for a bounce before it come down, or really it's going to get walked down instead of the typical bigger drops we see. That's what I'm expecting. I don't have any more positions on it except for some of those calls, so I'm going to look to try to take advantage of it again. But now again, we got to be a little, last week and how it's broken these levels and chilling at support, it showed us a little bit. But I watch Beyond, I think that could create opportunity. Next is going to be Facebook. They've just operated really, really weird the last few days. Again, they had some bad news, and you could see they're kind of on pace with the market. So I think the lack of volume and liquidity could contribute to this, but watch for another news event to take them out. Or anything of that nature. But again, I've lost a lot of money trying to bet against them on times, because Facebook kind of surprisingly shows this weird level of support like Boeing. But then again, that's the next one. Boeing was one of those bigger leaders that we saw last week. It's still lower than that Friday. That's one thing I would take a look at on both Fridays. It looks a little bit different than the market. So again, either lagging or leading, but it did hit one of these bigger lows. It bounced up, but if it can't get support at some of these higher levels, I think it's going to come down. That's why we still have those September spreads. But I'm going to be looking too. If there is a short-term opportunity, hopefully we could take it, but keep an eye out for Boeing and how it does. But don't forget how crazy it trades. So that's pretty much it, though. I'm going to leave you guys with that. Make sure you post your watch list. Make sure you're hydrated, ready to go in the morning. Get that blood pumping. Get your watch. Let's just go, baby. Let's go. See you in the morning.